Now, since the last update, we've had a bit more intraday price action. This is prices up to Friday the 28th of March 2025. It's about 9:15 a.m. in the morning, so this takes the overnight trading with the US influence into account, but the market hasn't opened yet on Friday the 28th of March in the chart you're looking at. In a previous video, I did mention how the price action could be considered as a 1-2 in this area here, but this wave 2 is very small, and it is a bit flat. It's more like a wave 4, if anything. But technically, waves 2 and 4 do alternate. Typically, wave 4 is sharp wave 2 is sharp and wave 4 is more complex and sideways moving, but that is a guideline, not a rule. So we could actually have that 1, 2, 3, and this could be a wave 4. It doesn't have a very good look or fit as far as I'm concerned, but the price action off this how I've got it labelled red wave 1 low, we've got 5 waves up into an A. We've got a nice 5-wave swing triangle for B, and this next move again, it's choppy, which you often get on the futures market with overnight trading, so it can get a bit messy. But we've got a 1, 2, 3, 4, 5 in an ending diagonal for a C wave. Now, ending diagonal in C waves aren't that common, but they can happen. Again, it's sort of a guideline, not a hard and fast thing, so it is valid. So the question is, where to from here? What's going to happen? Well, we've fallen short of the target area for a typical wave 2, which is 50 to 61.8% in that purplish coloured box. It does count nice as an ABC, so a few possibilities are that purple count was right, and we've got a 1, 2, 3, 4, and we're going to see a 5 to new lows, probably around this area, because wave 4s do typically go or retrace 38.2 to 50% of the prior move, and we've just snuck into that 38.2% area just above it, and we've got a rejection. Now, price can reject even if it's going to come down and rally back up later, but that is a typical area of wave 4s, so you got to be on the lookout for these things. Now, a few things that can happen is that we could get wave 5 down, and then we get a larger wave 2. We could also, in this brownie colour, get a sudden drop, and that could be read as a wave 5. It could be seen as the start of a red wave 3, but it also could be an X wave with an ABC rally into that original wave 2 area. So I think this highlights the problem with Elliott wave. It's the corrective patterns that are difficult and catch a lot of people out, and you just got to work through them. I think there's about 21. They reckon there's 21 different Elliott wave corrective patterns, and you never know quite which one it is until it's over. But you've just got to work through the scenarios. At the end of the day, prices should be heading lower, although with that X wave and a higher 2, they will be higher in the short term, and then they'd head lower. And in circumstances like this, sometimes you just need to zoom out onto a larger time frame, and if you switch to a daily chart, the trend is down from that black wave 5. Any way you count it, we're experiencing a corrective rally and prices should head lower. And it's a corrective rally because of the choppiness of the price action, and as I've said before, the red wave or purple wave C here is at a shallower angle, so it's not a 1, 2, 3, it's definitely corrective, and unfortunately we're just going to have to see how the price develops. Thanks for watching, and I'll post another video soon.